My name's Isabel Savage. I'm tax partner at Bishop Fleming. This is the second in our series of employer solutions webinars. Our first covered the world of pain, which wasn't technology. It was actually employment status for tax purposes. And today we're shining a light on some of the complexities of global mobility. Brief reminder. Our employer solutions team bring together the knowledge and experience of payroll, of tax, and our financial planning team to provide a joined-up solution to some of the intricacies of employee reward and retention, a topic I know is very close to our hearts. So I'm joined today by two senior managers in the team, Adele Clapp and John Mitchell, who between them have a wealth of expertise and will skillfully steer you through a little role play. So I'll hand over now to Adele, who'll set the scene.
Thanks, Izzy. So as you just mentioned, we're going to look at various issues that affect companies who send or allow employees to go on international assignments. Before we do this, I just wanted to touch very quickly on why businesses may want to consider offering international opportunities to their staff. Companies who have increasing trade overseas may start to think about expanding their business in order to manage this. And by that, I mean they might think about setting up a subsidiary or a branch over in the other jurisdiction. As their current UK workforce know their business and style of working, sending UK staff overseas to manage this expansion or to train local employees in the other country may be what is best for the business overall. And this is so that they have the right people in the right place at the right time. Offering international opportunities can also be a great way to incentivise and retain staff, and also enables you to share good practice globally. There's obviously a lot to think about with international moves, but by making sure you plan these moves in advance, and we're going to emphasise that throughout this webinar, you'll have the time to consider the key areas to make the opportunity a success. So outside of tax and accounting principles, you do need to think about things such as immigration, employment law, salary benchmarking, cost of living adjustments, and possibly even cultural training, just to make sure that a move is successful. You also need to think about for your business what the overall cost of a move will be for the organisation. You also need to make sure it meets the specific needs of your business and is compliant with regulations across the jurisdictions. So today we're going to run through two very common scenarios that we've seen from our clients both before and during the pandemic. We're using a conversational approach to do this based on typical conversations that we have in this area. We're mainly going to think about issues with tax residents, consider issues with payroll, think about tax and social security implications, and also lastly touch on what we can do to help you. The scenarios are set into three main areas, thinking about the historic, current and future considerations. So Izzy herself is going to play the role of our client today, and John is going to be our expert Bishop Fleming advisor. What I would say is if you do have any questions, please type them in the comment box and we will try and pick them up throughout the scenarios, as I'll be jumping in and out just to really disrupt the flow of the conversation. If we don't get through all the questions, or if you've asked something that's very specific to your firm, we'll try and pick these up after the webinar. So over to you, John.
Thank you very much, Adele. Hi, Izzy. How can I help you today?
Hi, thanks for seeing me. So I've got a few questions for you. I've got a few issues concerning some of our employees.
Okay, where would you like to start?
Right, so we've got one guy, Stavros, who we've recently found out has actually been working in Greece for the last 16 months and we hadn't spotted it. We weren't aware he'd gone at all, but apparently he decided after the first lockdown that he needed extra help with his childcare, so moved abroad to stay with his parents.
Okay. Not an uncommon scenario, I'm sure, in the recent times. How did you find out about this?
Well, we invited him to a team meeting, and it was only when he realised it was a proper face-to-face meeting, not a Teams call, that he phoned to cancel and sort of explained.
Okay. And is he going to move back to the UK anytime soon then?
Well, he's been doing a really good job remotely, and his kids are settled out there with his with their grandparents, and he's thinking about staying permanently.
Okay. And how do you feel about that?
Well, it's not ideal, but we could probably make it work. However, we do need to understand what this means for the company.
Okay, yes, absolutely. And we can come on to that. Before I sort of launch into a detailed explanation, it would be useful to understand a little bit more about his role with your company first, if that's okay. Can you tell me a bit about that?
Yeah, absolutely. So he's a member of the sales team. He's put in contact with potential leads from our website. He makes the initial contact, lets them know a bit more about our product. He's their contact once they sign up with us and deals with any product queries and stuff further down the line.
Okay, and would he typically on a job be involved in the actual negotiation and signing of the contracts for your client?
No. He introduces them to a more senior team member who goes through the terms of the sales contract. Our FD signs all the contracts on behalf of the company currently.
Okay, no problem. And obviously with Stavros being based in Greece, one question I would like to ask is whether you actually have any clients in Greece at all, and are you sort of looking to expand into that market?
Not currently, no.
Okay. So when Stavros is searching for his leads, in terms of the sort of practical side of that, does he contact those leads through a UK phone number? So sort of it's not like they are aware that he's working from Greece.
No, like us, they'd be completely oblivious of the fact that he's actually phoning from Greece. He's using his UK number and his footer in his email shows a UK address, which is where all the contacts are sent to. Contracts.
Okay, fair enough. So I think just on that brief summary, there are a number of considerations that we'll need to look at in relation initially to the historic position. So we've sort of got to look at whether or not Stavros will be creating any reporting issues for your company in Greece. We probably need to consider the practical issue of paying Stavros and whether or not there needs to be a Greek payroll. And then the final element is, in addition to the tax implications, we will need to think about where he and indeed you, as is the employer, will need to be paying social security. We also then probably need to come on to what you're going to do longer term. You know, you've mentioned that you might allow him to stay in Greece, but ultimately you have got to think whether that positioning will work for the business long term, and also if it sort of does but sort of doesn't, you know, may we find ourselves in a hybrid scenario where Stavros will be working both in the UK and in Greece.
Okay, so where do we start?
Well, with any overseas case, what we will first need to do is talk to our Creston firm in Greece to get their input from the Greek side. So Bishop Fleming are a member of the Creston network, and there are similar sized accountancy firms to us in countries all around the world who we can contact for help in scenarios exactly like this. So we would obviously make contact with the firm over there. From experience, just my initial thoughts on what we've discussed is there'll probably be a Greek payroll obligation here, which has arisen as a result of the duties being performed in Greece. And unfortunately, there can be some pretty substantial penalties where there is late registration for payroll in Greece specifically. So we'd need to review his residence position in both countries to establish where there was a requirement to operate payroll and when that requirement started.
Okay, but we had no idea that he was even over there. So surely there must be some sort of appeal against penalties for late filing, late registration.
So lots of countries have sort of made concessions and things due to the pandemic, because this, as I say, this is not an uncommon scenario. I'm not aware of any specific mitigation in Greece, but absolutely we'll discuss that with the Greek advisors and always work to minimise those costs for you.
Okay. I don't want to be mean about it, but is there any chance of us claiming some of these costs from Stavros?
Unfortunately, it will be a company responsibility, although you may want to look at the legal position, as he may actually be in breach of his employment contract by virtue of the fact that he didn't tell you that he was going to work abroad.
Okay. One other thing, you did say something about he may have created a tax presence for us as a business. What's that? What's that all about?
Okay, so in addition to the things we've talked about from a payrolling and a sort of personal perspective for Stavros, depending on what the employee of a company is actually doing when they go and work overseas, they could be considered create what's called a permanent establishment in that country. So what this in effect means is that by virtue of what they're doing out there, they've created a place of business in that country, and then that can create company reporting requirements. And there could be a need to, for example, apportion part of the overall business profits to the work that Stavros is carrying out in Greece.
Okay, so he might have created a tax presence for us, and how would we know?
So this is where we would need to bring in the Greek advisors again, because obviously they will be looking at this from the point of view of Greek rules. Obviously, we will look at it from the point of view of UK rules. The main premise will be set out in the double tax treaty. So normally under most double tax treaties, a place of business is established where someone has a right that they regularly exercise to negotiate and conclude contracts on behalf of a business. So you've already mentioned that Stavros doesn't typically do that and doesn't have the authority to do that. But the other way that you could also create a permanent establishment is if you've got an employee who's using a home office for a prolonged period, it's usually 6 months or more, that could also create a permanent establishment as well. Now, it doesn't sound like you're holding Stavros's home out as a Greek office. You know, he's still ringing from a UK number, and as you say, your clients aren't aware he's out there. And there may also be a sort of a way to get out of the issue if you could say that the duties that he's doing over there are sort of preparatory or auxiliary rather than, you know, the main thrust of your trade. So I think we need to have a look at Stavros's duties in a bit more detail, discuss Greece's interpretation of all this as well, and look at the tax treaty and see if there's an impact for the company. I think the other thing I just want to circle back to was the third thing in my list, which was where we did mention that social security is another big factor here. So there's the personal taxes, the company taxes, but also the social security. Obviously, with Brexit having just happened, we do need to think more carefully about that as well. I mean, it's not fundamentally changed the position. Ultimately, you're only looking to pay social security in one country, and broadly this will be the country in which he is living and working, but there are some complexities when people are transitioning out of the UK that we need to consider, so I will need to look at that area in more detail as well. So what I would suggest we do next really is if I contact the relevant Creston member firm in Greece, we arrange a meeting which will be yourself, me, the Creston firm, potentially Stavros as well, talk through the position in a lot more detail and see the best way to sort out the historic issues. Ahead of that, if you could sort of send me a job description for Stavros and a copy of his current employment contract, I can provide that to the Greek firm as well, and that can inform the discussion.
Brilliant, that all makes sense. Now, is there anything more that we can do to improve the position, the historic position?
Unfortunately not, no. The historic period is a matter of fact.
I was just going to say before I was going to not let John answer that question because my script was not up to date, but just pausing it there for a second, as John emphasised, where we have got a historic situation, we can only look to resolve the issues. We can't do anything to improve them for you. So obviously, getting advice up front is always recommended. Where a company has become aware that an employee is working in another jurisdiction and the employee didn't tell the company that they were doing so, as John pointed out, there is a legal point to consider here as to whether the employee is in breach of their contractual terms. Obviously, you're going to want to consider the role of the employee in question and their value to your organisation before you actually pursue this any further. But if it is something that you're looking to take forward, obviously we can work with any legal advisors to help you resolve this. John very briefly touched on social security. We're not going to go into too much detail about this because it is very complicated, and in some situations the social security position is actually more complicated than the tax position. The overall aim, as John did say, is that an employee will only pay social security in one country. How we decide where social security is payable depends on where the employee is working, as we have to consider whether they're covered by the agreement with Europe or a separate social security agreement. If they aren't, then they'll be classed as going to work in a rest of the world country, and that's got an associated 52-week national insurance tail that can be a bit of an unexpected sting, especially where they go straight into the other country's social security system. Following Brexit, we are still waiting for the final agreement with Europe to be put into legislation. Until this has been done, it is possible that there could be changes to the current rules and how they're enforced at the moment. So, as mentioned very briefly, in most cases, social security will be payable in the country in which the employee is living and working, but there are exceptions to this. So, whenever we talk to a client about international moves, what we need to understand is where the employee is working, what their proposed working pattern will be, where they live if it is different to where they're working, and whether they're being taken on as a local hire in the other jurisdiction, or whether it's a move that's been requested by the employee. We also need to understand where the head office of the company is. Okay, so I'll let John pick back up again.
Okay, I suppose, Izzy, what we could do is consider going forwards whether we can change anything in the contractual relationship with Stavros and see if we can improve the position that way. Would you say Stavros is a key employee for your business?
I wouldn't say he's key. He's very experienced, and it'd be really hard to replace that experience immediately.
Okay, so you would be prepared to sort of spend some time exploring the position to allow him to remain in Greece for the long term?
I suppose we'd want to keep him for the immediate future, but it would depend on the costs involved as to whether this arrangement is feasible longer term.
Okay, well, of course, we can help you to calculate the costs involved, but we would need to look at what your requirements for Stavros would be going forwards. It would probably also be worth looking at comparisons of local salaries and benchmarking to see what the Greek costs of living are and comparable salaries to make sure you're competitive. And it may also be worth looking at renegotiating the contract using Greek terms, because obviously his circumstances are going to be very different living in Greece to living in the UK. Would he need to come to the UK to work at all, do you think, or is he going to be full-time based in Greece?
He will need to come back for in-house training sessions, and we might need him to come back to help train new starters and see clients on occasion.
Okay, and as a rough percentage, I appreciate it would only be a very rough percentage. How much of his time do you think he would come back to the UK for?
Maybe 20%. It depends on whether we make any changes to his role.
Okay, so if he stays as an employee, we are probably going to need to consider his UK residence position as well, as this will impact what you as the employer need to do and the options available to you with respect to operating UK payroll.
Cool. What do you mean by that?
So payroll often follows residence, and if Stavros doesn't break UK tax residence personally, there could be an ongoing requirement to operate UK payroll, regardless of the fact that you may also need to operate Greek payroll to pay him in Greece. If he breaks UK tax residence, there may still be a requirement to operate a UK payroll where he carries out substantive duties here. So substantive duties are days where he'll be performing similar work and duties to those that he does in Greece. There's no real difference in what he's doing, and those sort of duties would remain taxable here if he performed them here. If he was just coming back for training courses and as we earlier mentioned, sort of auxiliary activities, these days may be classed as incidental to his main job and his duties that he's performing overseas. And in that case, the incidental days may potentially not be taxable. So we'd have to think about that a little bit, but that may reduce part of what had to go through the payroll. Unfortunately, if he does attend any client meetings, though, I mean, they're going to be substantive duties because that ultimately is the main part of his role.
So we're potentially going to have to operate UK payroll and Greek payroll for him.
Yes. In short, unfortunately, that is a situation which could arise. There are some concessions that we could apply for in the UK, depending on his residence position, which may remove some of the cash flow disadvantage of having two payrolls, and may remove the need to be sort of paying 100% tax in both locations at the same time.
Because I suppose without any concessions, he could end up sort of receiving his pay net of two lots of taxes, the UK tax and the Greek tax.
Yes.
Okay, which would be pretty horrendous.
Yeah, the point to note on this is whether it is a payroll requirement in more than one country. In the majority of cases, these assignments won't actually result in double taxation occurring, and this is because there are numerous double taxation treaties in force across the world. In the few cases where there is no treaty, it is normally possible to claim a foreign tax credit if foreign tax is paid in that other jurisdiction, but only in relation to overseas work days. So those are the days that someone is physically working in that overseas location. Where there is no overall double taxation, there can still be cash flow disadvantages to the employees. And this is because of the fact that claims for relief can only be made at the end of each tax year. So obviously, different countries have different tax year ends, which can then result in a delay in the employee being able to claim relief. Even if a claim for relief can be made via payroll, these claims are only estimated based on the foreign tax that's going through the other country's payroll, and they can be very limited in scope. So, for example, in the UK, you can apply for a concession to give foreign tax credit relief via payroll in certain circumstances. However, you can only claim relief for workdays that are physically performed in the other jurisdiction. So if someone is working in the UK and Spain, for example, the UK may be able to give a credit for foreign tax suffered in Spain, but only in relation to those Spanish workdays. The Spanish payroll could still be run on 100% of the employee's earnings, which could still lead to a cash flow disadvantage to the employee, and then you've still got the timing issues to consider. It's obviously important to understand the working pattern upfront as much as possible. I know it's not always possible in a real life situation, but if we have an estimate of what is the proposed pattern will be, we can ensure payroll is being operated correctly and any concessions can be applied for as quickly as possible across the jurisdictions. Just a final quick point from the employee perspective. As you may have guessed, the employees are going to have a larger compliance burden, and this is because they're going to have to complete tax returns in multiple countries, and they're also going to have to track their travel in order to claim relief. And it's not just work days that they have to track, they have to also track general days of presence in each country. If they don't do this accurately, then obviously the relief that can be claimed is going to be restricted, and then that's when you do end up with a double taxation situation. John's going to talk more about this shortly, but I just want to emphasize that you as a business can support what the employees do, but obviously then we do need to consider the benefit implications of this. Where support is given, you should also consider making sure that all your employees take their own advice in this area. So back to Izzy.
Okay, so John, I'm thinking going forward, wouldn't it be better to reclassify Stavros as self-employed whilst he's in Greece?
So that's not a bad idea necessarily. What we would need to look at if we wanted to explore that is some countries have similar employment status rules to what we have in the UK. So in the UK, you may be familiar with the rules whereby we have to look at the relationship that an employee has with their employer to determine whether it's an employment relationship or a self-employment type relationship. So this would potentially mean looking at whether Stavros could work for anyone else, who controls exactly what Stavros does day to day, and where he reports for his instructions for his work. We'd need to check with the Greek team whether they have a similar set of rules and whether they look at the same criteria to see whether it's possible. And if so, then what changes we'd need to make to Stavros's contract. I mean, we'd need to look at his employment contract in any case, because whilst he's working in Greece, he's going to be covered by Greek employment law considerations. Obviously, I can't advise on these, but the Greek team may be able to do so. So you're fully aware of what this would mean for Stavros if he continued to be classified as an employee. If instead we could classify him as self-employed, then this would simplify the position for you, as Stavros, rather than needing to be on payroll, would simply invoice you for his services and you would pay him gross. I think the final sort of subtlety to that is that we would still need to consider UK employment status rules with respect to his UK workdays. So even if you put in place a self-employment contract in Greece, we would need to think about the UK rules and apply those to those workdays that he spent in the UK.
Okay, how would Greece know if we treated Stavros as self-employed instead?
So they can open audits into an individual's tax affairs in the same way that the UK can open inquiries into tax returns, and they could look at company and individual affairs in that way. Countries are exchanging information with each other a lot more as time goes on. They tell each other about people's bank accounts, properties that an individual holds, and so forth. The Greek team will be able to tell you more about the risks from a Greek side than I can, but ultimately there are a number of ways in which tax authorities can become aware of irregularities. I think the key question really, to sum up, is whether you are able to make any changes to his role in order that he could be classed as self-employed, and if you are prepared to do that, would it actually work for your business? He works in a sales role, and we'd need to ensure that he didn't become what they call a dependent agent, because that too could cause permanent establishment issues.
Okay, which creates that tax presence that you were talking about earlier. Okay,
Exactly.
So, okay, I think the next step is to have a meeting with the Greek team so we can think about this from both sides, maybe?
Absolutely, yes, because ultimately we wouldn't want to be doing anything from our side or making any recommendations which could create a position which is worse in the other country for Stavros or you.
Okay.
Perfect. So as John just mentioned, a lot of countries have their own definition of employment status. Therefore, if there is doubt about a contractual relationship, it is necessary to consider what the rules are in the other jurisdiction and how the employees are going to work across jurisdictions. We can then see how this interacts with the UK's own very, very complicated anti-avoidance rules in this area. We can also then make sure that the contract that you have across jurisdictions reflects the overall working relationship of the situation. And again, this is very, very complicated, so full advice should be taken in this area. With respect to the third scenario we're going to hear in a second, one of the key considerations as to the operation of payroll is where an employee's tax residence. And John has pointed in this direction earlier in the scenarios as well. So we also need to consider where they're physically working and how they're going to be regarded as a tax resident in that jurisdiction. So just to explain, tax residence is different to the legal definition of residence. There's also a different concept of residence when you're looking at social security, just to further complicate the issues. Tax residence is based on each country's domestic rules, and they normally centre around where an individual is physically present and also where their main home might be located. So when you're looking at physical presence, you're looking at work days and just general days of presence, holiday days, and just anything they're doing socially. So why is tax residence important? If someone's resident in a country, then in most cases, they're going to be taxed in that country on their worldwide income. There are exceptions, so we can't give you a hard and fast rule today, but that's just the most general situation you tend to see. If someone's not resident in the country, they might only be taxed on income that arises in that country. So rather than being taxed on 100% of their employment income, they might only be taxed on the work days that they're physically performing in that country. So that's why we need to understand what their residence position is going to be in order to determine what your payroll obligations are going to be. There are added complexities to the residence rules with respect to the fact that some countries allow you to split a tax year, and you can also make claims for treaty residence relief. But this is a very complicated area and is probably worthy of its own webinar, to be honest. So I'm not going to go into that in any more detail. I do just want to emphasise, if you are going to send someone to work outside of the UK, both the business and the employee will need to understand the residence rules in the countries involved in the move. So one way to do that is to offer arrival and departure briefings for your employees, so they're able to talk to an expert in each country, and they can then be advised on how the rules are going to impact them. The advantage of offering these types of briefings to your employees, that any issues that crop up in that briefing can be fed back to you, so that appropriate conversations can be had with the relevant employees, and so you can look at making changes to the assignment. The other advantage of actually offering the briefings is that the employees are going to be aware of any day limits that they can spend in the country that they're leaving, so their home country. And this can help you avoid unexpected surprises with respect to potential ongoing payroll obligations. We do have, there's a bit of a plug for our international teams now, a very good example of the complexities that need to be considered via an interview that we carried out with Elena from Crescent, Spain earlier this week. It's going to be published in the last week of September on our website, because that ties in with our Creston week. Back to you, Izzy.
Okay, so we're looking, John, I'm speaking back to you again. John, we're looking to expand into New Zealand, and our FD is potentially asked to move over there with the aim of seeing how feasible this is and to test the waters. Can you support us with that?
Yes, absolutely. Yes, we have a great Creston contact in New Zealand that we could introduce you to. If you're going to start trading in New Zealand straight away, or your FD will have the ability over there to conclude contracts on your behalf, then we will also need to consider the corporate structure that you're going to use to make sure this works in both jurisdictions. So I think this would be a case where I'd also involve one of our corporate team from the outset. From an employee point of view, the requirement, similarly as we've discussed earlier, the requirement to operate an UK New Zealand payroll, will depend on your presence there and what he's doing.
And can you remind me what that means about presence?
Yes, absolutely. So having the presence there would be things like having an address for service, carrying on operations for the purposes of a trade, setting up a permanent establishment, and if the FD is sort of negotiating and signing contracts over there as well. If he chose to settle over there sort of voluntarily, to continue carrying out his UK employment duties only, this would not necessarily be classed as having a substantial presence over there. And in that case, actually tax requirements could fall on him instead.
Okay, so can we help Dave with his move?
Yeah, absolutely. Some of these comments will depend on the structure that you use and Dave's personal residence position. We'll need to know how long he will be going to New Zealand for, how often he'll come back to the UK. I'm assuming he'd be required to come back to the UK for some board meetings.
Yeah, so he's got some family out there. I think he said he'd only be coming back here a few weeks a year. We will be having our main board meeting then, but for any other issues that crop up, he'll just have to Zoom or Teams in.
Okay. And how long, I appreciate this is, early days, but how long would he be intending to be there for?
Potentially upwards of 5 years.
Okay. And is he a shareholder in the business?
Yeah, he is.
Okay. So, I mean, with going out there for 5 years, it sounds like Dave could break his UK tax residence. and it might therefore be worth looking at how he is sent to work in New Zealand. So there is a social security agreement, coming back to that social security point again, between New Zealand and the UK, but there may still be a requirement to continue to deduct national insurance for the first 52 weeks of an assignment. However, if you were to set up a New Zealand company, and that worked from a corporate perspective, and he were to become an employee of that company, this may get around that social security issue. The other thing which is slightly different for Dave versus Stavros is obviously Dave is a director of the company, and for any UK director duties, there'll still be a payroll requirement in the UK for those director duties which are physically performed here. So in order to sort of start separating those duties out, you may want to think about having a contract separate to the rest of his duties in place for the director's duties if you don't already.
Mhm.
I think the other thing you might want to think about here with Dave moving as far as he is relocation costs. We'd need to consider the New Zealand rules for those rather than the UK rules, because they'd be linked to a New Zealand employment. If he stays employed by the UK company, there would be tax exemptions that could apply for travelling to New Zealand to start his employment, and you could even contribute some relocation costs, which could be tax exempt in the UK up to £8,000. So it's probably worth thinking again what sort of incentives and support you could provide, and we can look at that. I think the final thing is I'd recommend thinking about how he's going to be paid in New Zealand, because if he breaks UK tax residence, his pension provider may not allow him to contribute more than £3,600 gross into a UK pension scheme.
Mm.
So again, if he's got substantial pension contributions as part of his overall package, you're going to want to look at that package before he goes, work out what the obligations in New Zealand are, and make sure that you structure his package competitively out there as well.
Brilliant, absolutely brilliant. I'd really appreciate the introduction to your corporate team and the New Zealand firm so we can move this forward.
Excellent. Thanks, John and Izzy, for those conversations. That brings us to the end of the scenarios. I do have a couple of questions from Alex and Emily with respect to a minimum period that an employee can work overseas for. It does really depend on the country that you're going to, because in most countries where there's a double taxation treaty in place, the payroll obligations might be negated by the terms of a double taxation treaty. And that tends to specify that if someone's spending more than 183 days or less than 183 days in the country and the costs are borne by the home country payroll and nothing's recharged to the host country, then there won't be any tax that crops up. That is the treaty rules. So you do actually have to just double check what the domestic position is going to be in the country they're going to. That's also tax rules. So social security, again, is different. The shorter someone is overseas for, the less obligations there are going to be on an employer going forwards, because every country accepts that some people will work internationally and they don't actually want payroll being run for 2 days in Germany, 3 days in France, in that situation. And that's why we have got the treaties and definitions of incidental work days. So I would say that I can't give you a hard and fast answer. It depends on the situation, but if anyone wants a conversation about their own situations, more than happy to oblige. And we can just get a quick check with Creston just to see that the position in the other country is the same. Okay, I hope I've answered those questions satisfactorily. I can't even say the word, satisfactorily. So through all the conversations we've heard from Izzy and John, we have tried to emphasise that all the key considerations that you need to bear in mind when you do send someone to work overseas. As mentioned right at the beginning, there are other considerations that need to be borne, such as how you're going to remunerate the employee and what their remuneration should be. You need to think about the legal points on immigration and employment rights, and also whether you want to offer cultural training, because interestingly, the employees who undergo cultural training in the host country actually have a much more beneficial and rewarding time than the people who are just chucked over there and left to get on with it. So there's lots of different things that you do need to consider, and it's not just about tax, social security and payroll. The other thing is, once you send them out there, you actually have to think about how you're going to bring them back and how you're going to keep them motivated once they're back in the UK, and what would happen if someone else has filled their position in the UK. There's a lot of things that are worth considering. Where international moves are planned in advance, These can be really good for your organisation. So though it's complicated to plan, they can really help to develop and motivate staff. And you do actually learn good practice across the globe as well. So my key take-home point for you guys today would be to seek timely advice and appreciate that as you are actually dealing with multiple jurisdictions, when you do plan these moves, they can take some time to organise and set up. So it's not as simple saying, I've got someone going to Spain tomorrow, we won't be able to get a payroll set up in Spain by tomorrow. It does take some time. So whenever you're approached about someone who wants to go on an international assignment, or you're looking at setting up a subsidiary overseas, it's worth just starting to think about your employee needs at that point. So hopefully I've emphasised that enough today. Just to point you in the direction of some more helpful resource, we do have various blogs, articles on both our employee solutions and international knowledge hubs. These all emphasise the key points for you to consider as a business and also for the employees to consider. And as mentioned earlier, there is also an interview with Creston Spain coming out in the last week of September. So what can Bishop Fleming do to help you? Obviously, we do have the expertise in helping to structure overseas moves, and we can help you consider what an employee's tax residence is going to be. We can offer the arrival and departure briefings for you. We can assist with payroll considerations, and we can work with legal advisors to make sure that you're getting the right advice with respect to visa, work permit costs, and changes to the employment contract. We can also help you actually cost the assignment and advise you of what your responsibilities are going to be in both countries. So as you can see, we can do a lot for you. We can also help design a remuneration package across jurisdictions to make sure it's tax efficient in both the UK and the other country. The other last point that I do want to make is that obviously no one country has the same tax or social security rates. So this can impact on the take-home pay of your employees. So you as an organisation need to consider whether you want your employees to be affected by the difference in tax rates, or whether you want to help them and make sure that they have the same net take-home pay regardless. So in this sort of situation, you probably consider whether it's a move that's instigated by the employees or whether you're actually sending them to work overseas. But if you do help your employees with any of their increased tax burdens, this will increase the overall cost of the move for the company. We can help design the tax equalisation policies, and this is where an employee would end up no better or worse off for going on assignment. Or we can advise you on looking at tax protection, where someone can end up no worse off for going on an assignment, but they could end up being better off, and most employees will probably love that one. Otherwise, we could also look at options where the employees actually shoulder the additional costs, but the company helps them with the immediate cash flow disadvantage. Obviously, most of today has been focused on people leaving the country, but there are similar considerations for inbound employees. So as mentioned above, whenever you consider whenever you consider sending someone abroad, just take advice nice and early. And over to Izzy for the last remarks.
Okay, just a big thank you to John and Adele. That's been fantastic. I'm frightfully sorry about the technical difficulties at the beginning. I'd just like you to just to let you know that we've got another webinar coming soon, which is all in relation to our benefit offering. Our next mail shot's coming out in October. And finally, look out for the interviews that Adele referred to, our interviews with our Creston colleagues, which are taking place regularly. Should be super interesting. For anyone doing or thinking about doing business in the US, that interview is already on our website. Otherwise, watch out for our chat with Creston Spain, which will be online soon. All right, any questions, do contact us. Our details are on the website. And thank you very much for joining us. Thanks. Bye.